Altria stock, ticker symbol MO, a 93 billion market cap company with a dividend yield of 6.8%. Companies like Altria who are selling cigarettes are always a discussion between investors. Should you invest in a sin stock? Today I'm not going to answer that question for you. The only thing I will be focusing on is how the company is performing. So in this video I will show you everything you need to know about Altria. I will show you what Altria does and I will show you my fundamental analysis to see if MO stock is a buy or not. I'm very excited to see what you guys think about Altria stock. So please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analysis every week, where I will tell you everything you need to know about the stock market. So, what does Altria do? Altria produces cigarettes, cigars, pipe tobacco, smokeless tobacco, oral nicotine pouches and wine. It also maintains a portfolio of finance assets. The company's smokeable product segments generates the most revenue and profit. Here we see that smokeable products represent 87% of the total revenue, and oral tobacco represents 10% of the revenue. So, Altria is still highly depending on the smoking products. As I said, I won't be talking whether you should or should not invest in a sin stock. The only thing I want you to show is that less people are smoking these days, and this could harm the business, especially because the biggest revenue stream is still the smokeable products, which represents 87% of the total revenue. In this graph we see the number of smokers worldwide per region from 2000 to 2025. We see that less people are smoking nowadays, and that's because of the health issues, of course. So this is a really important thing to keep in mind. And that's also why companies like Altria are focusing on other product segments such as liquor, alternatives and non-smokable products. In this graph we see that the cigarette shipment volume of Altria since 2012. It's going down hard, so this confirms the fact that less people are smoking nowadays. We see that Altria is focusing on other product segments, but to be honest, the growth doesn't seem to be that high. The equivalized volume in billions is going down since 2016 and the alternative smoking products are growing at the slowest rate possible. So I'm not feeling that comfortable about the alternatives. So now that we know a bit more about what Altria does and how the industry is developing, it's time to check the historical stock price performance. If we check the 5-year chart and compare MO stock versus the S&P 500, British American Tobacco or BTI, and Philip Morris, PM, the main competitors of Altria, we see that MO stock is down 26%, while the S&P has gained a whopping 92%. This immediately tells me that with owning a simple ETF of the S&P 500, you easily beaten MO stock back in the days. The competitors BTI and PM are also down a lot, so this is something which is happening in the whole industry. If we check the 1-year chart, we see that MO is up 3.3%, while the S&P 500 is up 13%. BTI and PM are also up and tripled versus MO in terms of growth in stock price performance. If we check last month's performance, we see that MO is up 2%, while the S&P is up 5.5%. BTI and PM are both down. So now that we know how the stock price did perform, it's time to check the fundamentals of the company. Altria is a 93 billion market cap company with a PE ratio of 38 and a forward PE ratio of 10, according to Yahoo Finance and other sources, which is quite different, so this might be something to dive in yourself, because different sources are giving you a different PE ratio. Operating margin is sitting at 57% and profit margin is sitting at almost 12%. Both are fine in my opinion. Return on assets is sitting at 17% and return on equity is sitting at 364%, which are both fine in my opinion. The 12th trailing month revenue is sitting at 21 billion and Altria has a quarterly year-over-year growth of 0.6%, which is quite low. In this graph we see the revenue per quarter for Altria. It's going up and down a lot, but if you check the long-term pattern, it's going up. I think it's very important that they find a way to grow the smoke alternatives way faster, because sooner or later the smokeable product will decline even further. If we check the balance sheet, we see that Altria has a total cash of 4.5 billion and a total debt of 28 billion. To me, this is not at a healthy level. They are capable of paying down just a tiny bit of the total debt, so that's something to keep an eye on. Operating cash flow is sitting at 8.4 billion and the levered free cash flow is sitting at 7.44 billion. Free cash flow is used to pay down debt, which is quite high in the case of Altria, but also to do acquisitions, buy back shares and of course pay dividends. A really nice thing about Altria is that they are buying back a lot of shares. For me, it's very important that a company buys back shares because this will lead to an easier way of maintaining the dividends and to increase the dividends. Because when there are less shares in the market, less shares will receiving dividends of course. Next to that, when shares outstanding are decreasing and the earnings are flat or growing, the EPS will go up more easily and this will attract other investors, meaning an increasing stock price. Right now, Altria pays a 6.83% dividend yield at an annual payout of $3.6. The payout ratio is sitting at 76% and the 5-year growth rate is sitting at 8.25%. As mentioned before, when the shares outstanding are decreasing, it's easier to maintain and increase the dividends. Altria did grow the dividends 14 years in a row. As we saw earlier in this video, the competitors of Altria have the same industry problems and the stock price is declining over the long term. If we check the main competitors of Altria, we see that Philip Morris has the highest market cap with 150 billion. Japan Tobacco has the smallest market cap with 30 million. When we check the dividends, we see that Mo has one of the highest dividend yields. Philip Morris has the lowest dividend yield. The payout ratio is sitting at similar levels and Mo also has the highest 5-year dividend growth rate. Mo also has the highest years of dividend growth versus the competitors. So to me, Mo is definitely the winner in terms of dividends. If we check the revenue growth, we see that Mo is really struggling versus the competitors. This might have to do with smoking alternative, which is growing at a higher rate at the competitors, for example. Or the decline in smoking products isn't going that fast as with Mo stock. This is something you have to dive in yourself. Mo has an average profit margin compared to the competitors. Return on assets is really similar to each other. Revenue is way higher at BTI and Philip Morris versus Mo stock. So this is also very interesting. It's the same story with the earnings per share. When we check the balance sheet, we see that all companies have similar total cash, but debt is at a higher level with British American Tobacco. The debt-free cash flow ratio is sitting at the best with Mo and Philip Morris, but it's still not looking that great. It's more that the others are way worse. So, my conclusion is that it's very difficult to say if you should buy, hold or sell this stock. For me, it's very important that you have a company which is operating in an industry which is growing every year and is not depending on a declining amount of customers. It's a very nice thing that Altria is focusing on the smoking alternative, but it doesn't seem to grow that fast. So that's also something to worry about. The overall fundamentals of this company are okay in my opinion. I don't like to see debt at these high levels and revenue isn't going up nice and steady, but it's going up and down a lot. A good thing is that they buy back a lot of shares, which led them to maintain the dividends very easily and even grow them. When we compared Mo stock versus some competitors, we saw that on some points Mo is the better one to own. But still, I think you need to ask yourself the question whether you want to invest in a declining industry. I'm an investor focusing on dividend growth stocks and I think Mo or the other competitors aren't a dividend growth stock, but just a dividend stock. Maybe even some kind of a declining defensive stock. Not sure if that's a thing though. So right now I'm between a sell and a hold sign, because all of this. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a video. Thanks for watching and I will see you in my next video.